Greetings students. Today we are going to learn about one of Japan's leading insurance company, Ichi Life Insurance. Let us know this company in a much better way. The Dai-ichi Life Insurance Company Limited, or Dai-ichi Life for short, is the third largest life insurer in Japan measured by revenue, only behind Japan Post Insurance and Nippon Life Insurance. Founded on September 15, 1902, Dai-ichi was the oldest mutual insurance company in Japan until a motion to demutualize was passed in 2009, and on April 1, 2010, it listed on the Tokyo Stock Exchange Nikkei, raising 1.01 trillion yen. As a result of its listing, Dai-ichi replaced Nippon Telegraph and Telephone Corporation (NTT) as Japan's most widely held stock. 1938, head office is moved to its current Tokyo location. 1975, first overseas representative office is established in New York City. 1982, first European representative office is established in London. 1990, investment in Lincoln National Life Insurance Company marked the first time a Japanese company participated in capitalizing a leading U.S. insurer. 1993, completion of the DN Tower 21, a new head office building. 1995, Great Hansing earthquake, simplification of claim settlement procedure. 1996, establishment of the Dai-ichi Property and Casualty Insurance Corporation Limited. 1997, establishment of Dai-ichi Life Research Institute Corporation. 1999, agreement on total business corporation with Industrial Bank of Japan, now Mizuho Financial Group. 2000, agreement to form a comprehensive business alliance with Sompo Japan Insurance and Aflac. 2002, celebration of its 100th anniversary. 2010, demutualization and stock listing on the Tokyo Stock Exchange. 2011, completes takeover of ASX listed Tower Australia Life Insurance Company. The wholly owned subsidiary is then renamed TAL. As of March 30, 2006, total asset $2,76,552 million USD. Policy reserves $2,27,524 million USD. Total capital $21,425 million USD. Solvency margin ratio 1,095.5%. Policies in force $2,085 billion USD. Policy holders 86,46,469.
We have Ed Rogers, the CEO of Rogers Investment Advisors, joining us from our Tokyo studios. And Ed, what's the deal here? Did you get into this stock? Are you going to buy in, or are you going to sit on the sidelines?
Good morning, Susan. Thanks very much for having me on the show. And hey there, Paul. How you doing? We love this IPO action. It's fantastic. As Paul notes, there's a developed economy with a lot of an aging population. But the best thing about that, as far as we're concerned, is there's a whole lot of money here. To have a $11 billion IPO in a country that's everybody's sort of written off of their investment list for the last 5 years is a fantastic event. It's a great event for the market. It's bringing new market entrants in. And we think it's a great thing for the Japanese space.
Okay, so Ed, weigh in here. Put a stamp on this. I mean, how well do you think Dai-ichi Life is going to do on day one?
Which when you're trading in the gray market at 147, 148,000, the numbers are what the numbers are. Paul's showing the screen at 160. If you're up 14% on day one, that's going to be a pretty good trade for you.
What about its pricing range? I think it priced a little cheaper than what people were expecting. Is this maybe a sign of desperation for you, or what do you think about that?
Well, people price things to sell. They're at 140, the range was variously between 125 and 150. So it's slightly top end of that range, and it was oversubscribed. So we think it's a very good sign that there's a lot more interest. There's certainly cash on the sidelines. Japanese households have $15 trillion sitting in cash savings. What the world needs and what Japan needs is for some of that money to become actively deployed into the markets. And that's exactly what we're seeing. All of a sudden in one day, $11 billion comes into the market. That's great for the equity markets of Japan. I would argue that's also great for the economy of Japan, because what's Dai-ichi going to do with the $11 billion? They're not just going to sit on it. It's not just cash that goes into the bank. This is cash they're going to use to improve their business somehow.
Daiichi has traditionally viewed efforts to increase corporate value while improving management quality as its own corporate social responsibility (CSR). To evolve this framework further under the new banner of Daiichi's social responsibility (DSR), all the employees will fulfill their social responsibility to each stakeholder, customers, society, shareholders, investors and employees, and strive to increase corporate value through consistent effort to improve management quality through the autonomous execution of PDCA planned do-check action cycle in each organization. Daiichi will contribute to the building of a sustainable society by adopting its Corporate Action Principle (DSR) charter so that it continually meets the expectation of customers, society, shareholders, investors and employees. The DSR Promotion Committee, which is chaired by our President, promotes DSR management. Every special committee dealing with key DSR issues is established under the DSR Promotion Committee. They developed and execute plans and manage progress. It enhances the effectiveness of DSR activities. The sum insured of new business of individual insurance and individual annuities in fiscal 2011 declined by 2.9% from the previous fiscal year to Yen 7,051.9 billion. The decreased sum insured fell by 5.1% to Yen 12,635.4 billion. As a result, the sum insured of policies in force at the end of fiscal 2011 declined by 3.7% to Yen 1,46,135.4 billion. The sum insured of new business, including that of Daiichi Frontier Life, declined by 1.0% to Yen 7,396.8 billion. So students, we got to know about the various aspects of Daiichi Life Insurance. We went through the company's history to its present market scenario. Hope you must have got useful information about the company. Have a good day ahead.